Hey guys, Dave Gandarillas here. It's Friday night. Actually Saturday morning. It's around 1 in the morning. I wanted to shoot a video today. I'm not going to talk about a specific opportunity tonight. I just want to kind of talk to you in general about a couple things. Before we get started, I am on Facebook. I am on other social media sites right here. If when you come to my portfolio page, these are all the different ways you can connect with me. So there's, Crypto World Network, Facebook, Twitter, FutureNet, Instagram. I got a blog, and then I got my channel here. So I look forward to having you subscribe to my channel, follow me, and you'll be alerted when I put out a new video, and you could decide to come and take a look at it at your convenience. Also, on my page here, if you're on my Facebook page, if you click on my banner picture, you can get to my portfolio anytime by just looking at the description and clicking on that link that's in there. So that'll take you to my page here. So this page, I'm not going to go over a specific opportunity tonight, but I just wanted to kind of give a highlight of what this page is all about. You can have a page just like this. It's a replicated site. If you click here, you could join. I'll get a couple pennies for you signing up. And you can configure this to be whatever you want. You could have a different picture back here. Maybe it's time for me to actually update this. It's been a while since I updated it. But basically, cryptocurrency is what my focus is. It will be for the next couple of years. There's a lot of money to be made. And by utilizing opportunities that focus on that and being in those things is going to set you up to be very wealthy if you take advantage of the fact that we are still early in this technology, and you can really cash out on the momentum that's going to start happening when more and more people start coming in. So as you go through here, you'll see these are different opportunities that I have, that I share with people, that I'm generating streams of income. Some of them require you to build a team. A couple of them don't require you, such as the mining. This also has mining. This is a marketing tool. This is my blog. So rolling back up here, Future Ad Pro, you can generate some money just by yourself. If you read this, you'll see that every $50 you spend, you get $10 back in addition to the $50 that you spent, plus you get advertising credits. I do want to make a note that I want to congratulate the couple people that took advantage of my promotion that I had and got started on this. I wish you guys the best in 2018, and just kind of look forward to future promotions that I might run at specific times during the year. The one that I had was around Christmas time, New Year's. I just wanted to kind of give back for the end of the year and get someone started on their journey in either growing their wealth, growing their time freedom, whatever their reason for wanting to do this kind of stuff. You got to figure that out, but more importantly, you got to get started. So iMarkets Live has products in here where you can just open up your own broker account, make connections to iMarkets Live, and the system will automatically mirror trades into your account, so you don't necessarily have to worry about trading the account. It'll trade for you, but the important thing is you have 100% control of your money. And you could just click on here and take a couple. There's videos on there, Fusion Trader, and also Swipe Trader. There's a number of products that you can use for the Platinum Plus level that you don't need to know how to trade. And it'll basically send you the signals, tell you to either input them into your trader account, or it'll automatically do the trades for you. But like I said, the difference is you're not sending anybody your money. You're controlling your money in your broker, and you're just making a software connection to your broker's account. And they're isolated from your money, but they do push in the signals into your account to transact that trade that they're saying is good for good for you to take at that moment. CoinMD, basically, I said it yesterday and I'll say it again. You're in the right place in the right time. You can get this coin right now for under a penny. There's a similar coin that's out there on the market already, and basically, if you do the analysis on where it is and where CoinMD could be when we go public, on the exchange in March of 18. This coin could very easily go to 20 cents. So you're picking it up at fractions of a penny, and just from past experience, and again, past experience doesn't guarantee future results. There's no guarantee. Always use risk money. But as you see, when you look at coinmarketcaps.com, right? Marketcap.com. Most of them, when they're going up, they're all going up. And like, you know, what do they say in the stock market? There was a saying, when the water rises, all boats rise with them. So just like it rises with them, it also falls with them. So you just got to be aware when the Bitcoins and others are doing bad, chances are a lot of them are going to be doing bad because they kind of follow suit. And more importantly, actually, this kind of is a great segue into my topic tonight. It's very important to realize when there's truly a fundamental issue with a coin or the space, or if it's just the media trying to instill shock and awe, fear, whatever you want, fear-mongering, whatever you want to call it, you know, either for the fact that they just don't understand what cryptocurrency is yet. I mean, when you have guys like Warren Buffett saying things that he just recently said, let me see what I wanted to do tonight. All right, there's a couple things. There's a couple videos that I want to play for you that I've found. Warren Buffett, crypto. Let me see if I can find it real quick. I'm not sure if this is it. Well, I'm not going to worry about the Warren Buffett one too much because, yeah, because I can't find it right now. But he basically recently said something that basically, for the most part, what he's saying is he sometimes gets himself in trouble with investing in things that he thinks he does know. And so in his mind that he doesn't even understand what cryptocurrency is, so he, you know, doesn't want to get involved in it. And you'll hear this from some of the big investors, but, you know, when the critical mass starts happening and the overall market cap, you know, starts approaching numbers, you know, this is 737 billion. I think if you click on here, you can see a history of how it's been, yeah. So you can see, you know, it's been ups and downs, ebb and flow. You know, it peaked out around 8 point something, and then now it dipped back down. And I mean, this is what I'm trying to say though. When this is happening, this is basically the health of the entire crypto market. Just like in the stock market, when you have a technology company in a certain area, say it's a bad example because, well, it's a good example actually. Well, I don't know. Let's just kind of think through it. So, for example, if we talk about a computer video card GPU company like NVIDIA, right? They're very focused on mining hardware, and typically, if you have one company that's doing very well, they come out with earnings. They either say that they didn't make the mark, or their supply is short. It basically brings uncertainty into the space by that public release. And even though another company that's in the same space, another video card maker, may not be totally linked to the weakness and the issues that NVIDIA may have, even when NVIDIA goes down, a lot of the other video processing, video card maker manufacturers will go down in sympathy. The term is sympathy. So basically, you'll see general normalized terms that when the crypto markets are going to go down, a lot of them are going to go down. Now, it's important when you look at the cryptocurrencies, you know, you pick the top 20 or whatever, top 10, when they go up, they're all going to go up. But when they're going to go down, they're going to go all down. And you see that there are differences in the graphs. And then even when things are going up, things are going really well, whatever Walton is. And then there's still stuff that's going to be bad, So there are some that are inversely proportional, some that are proportional and track almost identically. And you just got to be aware if it's a fundamental issue with a specific coin causing the problem, or if it's just general news. Like, for example, all right, I'm going to bring this over. I've got a couple things I want to show you. So first thing I want to show you is this news, South Korea crypto ban. So there was a recent article, a couple articles that came out a couple days ago. So right here, I mean, a bunch of a couple days ago, around the 10th, a bunch of stuff came out saying Korea plans on banning the cryptocurrencies. This is around the 10th, I believe, of the 10th of January. And then, just, not so long ago, another article comes out and says there is no cryptocurrency trading ban, the government says. So there was an official release by the government saying that there won't be a crypto ban. Now, there's different ways you could look at this. You could say that maybe they're trying to manipulate the market to sell off so that they can build their positions, and then, when it rises, they're going to make their money. Now, there's also articles that came out that North Korea is manipulating the markets and talks about they're launching of missiles to put some uncertainty in the world and affect the currencies, and they're also hacking different places to get more cryptocurrency, and they're suggesting that the government's using it to fund the government programs. So I guess my point is, there's a way, and I'm not going to get into it tonight, but there's a way for you to use your Google Gmail account where you can set up an alert. Let me see if I can show you something without for example, I have this alert set up in Google Alerts, and I suggest anything that comes out with regarding Bitcoin or cryptocurrencies, they send me a alert that there's a new article out. So for example, I get emails to me, and if you're on my Facebook page, you'll see there's times that I try to flow this down and out to the rest of the world. And I place some of these articles that I get in my email that I think is of some significance for you guys to see. I put it on my wall. I do have private groups and Telegram groups and WhatsApp groups and all that kind of stuff that I share with my teams. But it's very important for you to keep tabs on the news, because if you're waiting for a good time to get in and you determine that the movement in the market is not a fundamental issue of a specific cryptocurrency, but it's been weak because of some nonsense that came out in the media, that is a prime time to get into a position or continue to average your position that you might be in already. So always buy on weakness and sell on strength. So if you're looking at, there's another thing that I use. So I subscribe and I pay for, wonder what happened to it. Wonder if I closed it by mistake. No, here it is. Okay. So again, this is, basically they came out on the 10th and said there was going to be a ban. So, Bitcoin has run up a lot, topped out close to 20. And then it had, a steep sell-off. And, that might just, it's smart money. Smart money you're selling when it's such a huge, crazy run. And this is ending the year. And, just money, people just pulling money off the table for the end of the year. So another important thing to kind of take a look at here, if I break this down into lower denominations, you could maybe see it a little bit better. You know, I mean, I guess it's not so prevalent here because Bitcoin was already on its trek down. But somewhere around here, there was that news release about the ban, and you know, it did affect the overall market in a negative way. Now, what I also found interesting, and you know, everyone's concerned about Bitcoin being weak and all this kind of stuff, but there's something forming here that's a typical consolidation. So there's a lot of new money coming in. There's a lot of scared money. And basically you're seeing this consolidation wedge, right? It's wedging down into here. And then typically as it approaches these final points, you know, when it gets about 80% of this cone, you know, it typically shoots either up or down. So it's going to very quickly... You know, the 15th is a very key date. Now, I'm not telling you what's going to happen here. I'm just giving you my visualization and my interpretation of what's happening here. There was an article. Let me see if I can find it. December 15th, hedge fund, money, crypto. News. Well, I posted. I think I posted this on Facebook, so I can look there. But there was an article that came out that January 15th. January 15th, there's going to be a lot of bonuses being paid. Right here. Oh, no, that's another one. They're going to get paid a lot of their bonuses. Right here. So there's going to be January 15th is a date that a lot of the money is going to be paid to the people that have been trading. And they anticipate, based on the conversations they're having with a lot of these people, is that a lot of these people are going to be putting that money into cryptocurrencies. So what they basically were saying was that this is money that they weren't really, you know, it's never really built into their budgets. This is just an extra nice to have that they get as bonuses, and that they're going to use it for speculation. So they're saying that somewhere around January 15th, we may see some major strength in the cryptocurrencies. Now, what's ironic is if you look at this and you look at this to here, you know, there's so many squares, but I mean, realistically, this is somewhere around 15. This is around the 80 percentile mark, right? So we're on an upward track here. If you kind of lay it down here, boom, 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 boom. And then as the 15 is happening, if this track continues up this way, this might be the start of the breakout, either in the up direction or it could be in the down direction. But with all the money flowing in and money coming out of it being available on the 15th for people to buy more cryptocurrencies, we may see this as the point where this consolidation is done and it gets ready for the next trek upward, right? So they were targeting somewhere around 19 to 20K. So figure, let's just assume this path, you know, 19, 20K. I don't know what the angle is going to be, but you know, from where we are now to say 19K, that's a what is it, 5,000 over 5,000 over 14,000. It's like a 30% move that they're suggesting. And again, this is all speculation. I mean, I don't know anything more than you guys know, but you got to go with the media, and you kind of think about it. Maybe when you start putting the pieces together, maybe they were just trying to get positions built in here before that other money comes out, and then they're positioned well. So I drew this wedge back here. When this point hit, I had this wedge already going, and it hit, and it's staying within this wedge. This is going to be the next key point to consider, and it looks like that's going to be somewhere around the 15th. If you look at it on this scale, it's not very far from the 15th. So maybe that extra money that's going to inflow or be available is going to push it out of this. It's going to crack this trend line, and maybe it'll be up on upward momentum. So that's one thing I wanted to kind of show you guys. The other thing I wanted to show you is this other one called Zcash. Zcash to the dollar. So if I was able to plot, let's see if I can do this side by side. That's going to be hard. I guess there's a way. Oh, compare. Okay, I can compare to BTC/USD. All right. If you look at this, this is the Bitcoin. Which one's Bitcoin? I think this is Bitcoin. Yeah, this is Bitcoin. If you look at it though, they're both kind of following the almost identical curve here. So what I was thinking is, instead of worrying about dealing with a $14,000 coin and trying to trade that for those high numbers, if you guys are really, if you don't have the amount of money and it's a psychological thing for you, you might want to consider dealing with Zcash. It's around the 700, so it's a lot less, right? I mean, 700 as opposed to 14,000. It's like 5% of 14,000, so it's a lot more affordable. So you can go and you can buy a full coin of Zcash, and the movements are going to be comparable. But if you zoom out, the same thing that's happening with Bitcoin is happening here, right? If you draw this trend line, somewhere around there, and you take it and you just go, somewhere around here. Or if you want to be a little bit more official, maybe assume that was a breach on one, something like that. I mean, you could start right now. You could see that it's pretty much almost touched that, and now it seems to be on a downward trend. So if you were looking to go short, some of the things you guys can consider is something like that, right? And then like that. And then a new one that goes that way. And then before you know it, look what date it is. It's the 15th. So right now, chances, if it's going to hold, it looks like it hit the trend line and created 2 points. Really even there, you made the trend line right there, and then this one kind of respected it. Now, boom, now you can put a short trade in here and, I guess, hope and assume that it's going to bounce off here, so you would want to sell here and then look for a buy. So it's been representing and been holding pretty good here. Let's kind of look at it here. So like right here, this would be a buy, right? If it's going to do what I was just saying on the other side, chances are it's going to ride its way up to somewhere around here. And then if you want to be safe, you can get out of it. Or you can hope that the 15th is going to be very strong, and maybe it'll be the momentum to get it past. This one, where's the other one? Here, depending on how things go, yeah, same thing. You're going to pretty much get yourself to the point where you'll be in a buy. The safest thing. Okay, here's something else you guys should consider. When you're like figuring out trend lines and channels and resistance and all that, overall the trend of the cryptocurrency market is upward. So if you don't want to go against the grain and do a short and a sell, then what you should wait for is the price to come down to a level like this, hitting this wall, where you can buy. So you won't be going against the overall trend of the market, and it'll be lower risk for it to go down and more probability that it would go up, right? I mean, they always say trend is your friend. So, I mean, if you kind of figured out the channels and all, this is not a good view. Let me see if I can show you this. So this is actually my broker account. But, for example, if you do those channels and you figure out, you know, how things are going, again, I mentioned this the other day, these are called Bollinger Bands, and this is called the median. And basically, you know, this is RSI. So as the price is going up and down, you should be sitting and waiting and looking for a trap to catch the stock or the cryptocurrency or the forex pair in a trap. So one of the things that they've taught that I've learned over the last couple months is if you create these Bollinger Bands and you set them up for standard deviations, as the graph breaches these, at least one, two, you know, a couple of these levels, and the deeper it goes, a stronger flashback or change in direction is going to occur the deeper it goes, right? So you see this was a steep sell-off. It breached it really deep. And at the time of the breach, you see that it came below the 30 percentile number, which means that it was an oversold area. And then, what else? So as those two things happen, and you want to play the direction of the overall market, you wait for it to breach it on the bottom side, and you buy somewhere in here, and then chances are it's going to try to be forced back to the average median price. So you would get in here, and you would look to see, try to get out somewhere around here. Now another thing you can do is on a fast move like this is something called Fibonacci levels. So if you want to be safe, as it hits the low, you can, you know, you breach these things, and now you can say, okay, well, you know, if it's not knowing where it's going, it might go as high as 61.8. If it's going to continue going down, it's going to probably go a little bit less of a retracement. You know, at most maybe 50%. But the fact that it went up 61%, it wasn't a strong downward, you know, momentum. So chances are, since it went up so high, you know, you see here, right? I mean, it's retraced at least 50%. And then from there, the next move was what? Went down, and now it went up to 161. So those are like key Fibonacci levels that you can kind of play with as well. So I guess you can use that as a tool to help you decide on an exit number, right? So if you set this up and you want to assume that it's going to go 38% back up, you know, if you want to be conservative, you could probably set a sell right here. So you would have gotten from here to here, and then you're out. If you believe that it might go back to the median, then you sit. But then you see, look, once it hit 68%, you know, right above that, it breached that area, and then it came down again. So you want to take it from the most recent high to the most recent low, and then kind of see where the levels fall in. And these are like psychological levels that everyone plays by, and all the robots and all the bots that are made are programmed to operate with those Fibonacci numbers in mind. So here on the upside, now of course we all want to see Bitcoin go high, but realistically, if you want to be safe, you know, every time it touches the median and goes up, as it breaches one or two or three of these, is a good chance, you know, you're going to be in oversold mode. See here, it got very close, and it changed a little bit of direction, but it's still going up. But as it goes deep into here, let's see if there's an old example that I can show you. Well, for example, here, there's a deep one there, boom, it came back. Deep one here, boom, it came back. Somewhat deep, came back. On the upside, though, I don't see. Let's go on a higher scale. But then there's times you get something like this, where there's just so much momentum that it just kind of sits inside these bands. And then finally it's going to trace out of it. But if you bought it thinking it's going to go down here, this is why I say on an upward trending market, you probably don't want to play with these upper bounds. You want to get involved with the lower ones. If you're thinking the overall trend is up, you have a safer bet to buy here and get out here, or wait for it to come somewhere in here and then sell. But if you wanted to play against, it's called counter trend, you'd be selling here, and it could be painful, right? I mean, you could have gotten out if you just wanted to take a quick little cut here. But if you were hoping for it to come back here, you'd have to wait this long. And it does. I mean, you could have gotten out of this trade over time. But like something like this, you know, if you wanted to sell here and then all of a sudden you don't have the depth of, you know, handling the risk of the amount of money that your account's going to be drawn down by it flowing all the way up here, and do you know if it ever is going to turn around, right? I mean, it's breaching here, so, you know, at some point oversold is going to be realized and it's going to turn. But if you would have gotten in here, you would have to sit and wait all the way over to here before you're back even. And then, you know, I mean, I say you got to wait a long time. I'm talking like 3 days. So it's not really that long. But you got to decide what kind of trader you are. Are you going to be a 15-minute trader, a day trader, a week trader, a month trader, a year trader? Are you going to buy and hold forever? You got to kind of decide what your personality is. And then from there, you decide, you know, how often you want to get in and get out. Or if maybe you have a long-term position and then you play in and out. But if you have a long-term position and you're getting in and out, chances are, if you have a a position that's a long for a long-term hold, chances are you want to play the positive moves, right? You're not going to bet against yourself, right? If you're holding it long, you're hoping it's going to go up. So you want to play the moments where they breach on this bottom side, right? So every time it's breached, you know, down to like the 4th level, boom, comes back. And here, even mini ones, it comes back. But, I mean, every time it's touched these levels, boom, it comes back. A little bit here, boom, it came back. Now it's here. You know, there's a high probability it's going to come back down. So you wait. You wait for it to cross these numbers. I mean, these Bollinger bands. And then you also look for the points where it hits 30% or less, which kind of says it's oversold. So these are key indicators. You know, here it's not so deep, but here, you know, you can see right here, it breached on a low one. Right here, it breached on a low one. What happens? Boom. So, of course, it's easy to look at a chart and say, you know, this is what happened because it already happened. There's another thing, like right here, like if you have these other indicators on your screen, don't get into the fear of missing out syndrome where you gotta get in, you gotta get in. No, you sit and wait. You sit and wait. But Bitcoin has been historically known to swing 20 to 25% in one day. So even though you're at 14,000 right now, what's 20% of 14,000? That's 2,800. So it could realistically go down to 11.2 or 12. So it very much could swing. Like look at this swing. It goes from 14.9 all the way down to 12.9. And what day scale? We're on the hourly scale. So this is like a 4 or 5 hour period. It moved almost $2,000. So wait for these moments. Now, if you use okay, let me go back to this screen. If you use, if you decide to pay for it and you're a serious trader and you're going to be doing things with trading for a while, I strongly suggest you set up alerts, and I'll show you what I mean here. All right, so I can set up an alert that I'll get an email and I'll get a text message. I can set up an alert when Bitcoin's RSI. Let me just put this somewhere, and then I'll show you what I mean. I can just put this wherever I want. So maybe I want to have some time as it's approaching 30. I don't want to just find out when it's already at 30. So maybe I set it for 35. And then all you do is you right click, you add an alert, and you do crossing, and I want to cross down because I want to be told when this RSI crosses this downward momentum. So this, like, you don't have to sit in front of the computer all day. You set this, and then you're going to get something in your email and say, hey, you know what? This RSI on Bitcoin is approaching 30, which means it might be oversold. And then you can also, well, I think you might even be able to do this. I'm actually curious now because I haven't done this. Wow, that's pretty cool. This is really cool. I didn't even think about doing this, but I can actually set up an alert to let me know when Bitcoin is approaching this Bollinger Band. So not only can you get the RSI, but you can get another alert saying that the Bollinger Band is being breached. So at that point, you know it's like imminent for you to possibly get in on a trade. And again, if you're betting on a long-term upward trend, don't work on the top side, work on the bottom side, because chances are there's going to be some weakness and then it's going to bounce back. All right, so guys, really that's actually it's not it. One more thing, and then we will call it a night. So there's another let me just bring up another screen here. There is a cryptocurrency called Stellar Lumens, and I've been in it for a long time, truth be told. I got in for when it was under 10 cents or a penny, I think, actually. So it's been a while since I've been in it, and it's done very well. Let me just get this back to my normal. So as you can see with TradingView, I've created a profile that no matter what crypto I bring up, I automatically plot the Bollinger Bands. I automatically have RSI, and I have this other trending. It kind of shows direction change in the short term. Oh, this isn't XLM. Wait, XLM BTC. Lumens. Okay, this is it. That was another one. But so you can see it's been very strong. But again, even this one, if you really look at it, it's creating a triangle wedge. You know, just kind of do some technical analysis learning. You know, if you truly want to learn it, you know, the IML Academy, the IML product that I have, that's where I learned all my stuff. I mean, of course, YouTube and other things have it, but look, same thing's happening here. Here it's kind of been in the middle, but 2 points kind of basically set up a trend, and when you draw it out, same thing is happening. So there's a video here that I want to play. It's kind of a long video, so I don't know if I'm going to play it all. I might skip ahead. But basically, I'll put this link. Maybe I'll actually grab this video and I'll put it so that you can watch it. But basically, it talks about.
Hi, Melissa. Regulators everywhere are taking a closer look at cryptocurrencies.
Yeah, there's a lot of
shut down exchanges that trade cryptocurrencies, so this is ramping things up.
Yeah, so there's a lot of media.
Now, Bitcoin, who knows? We're looking for.
So the China mining thing.
This process.
It's a good It's a good video to watch.
Let
me just find the point where I was. Okay, right here. So let me pause this. So this guy's going to talk about stellar lumens, and that's the point of me sharing this with you. It's something you guys should think about, but don't rush into it. There could be some more consolidation, there could be some more weakness. Build your position on there, but I've seen targets, and again, I'm not giving you investment advice. I've just seen, what I've come across is targets of up to $2 for this. It's currently at 60 cents, and it could go down lower. So be smart and build a position. Don't buy everything at one time. Buy some today, buy some more on weakness, buy some more, wait and be patient, because it's not something that's going to happen overnight. It's probably, 4 months or something like that. You can possibly see that number. It's not going to just shoot up overnight unless some huge news comes out, which none of us can ever predict. But it could happen. So I'm going to play this video. I'm going to step out for 1 minute to use the men's room. And when I get back, we can continue. So I'm going to play this for you guys so you can hear it. And I'll be right back.
So I'm buying that based on T0, which is their ICO.
All right, well, despite all the regulation talk, BK says there's one coin that should be the next shiny addition to your crypto portfolio. BK, why don't you head over to the class and
Why don't I
get the
try to
crypto
walk and
class
talk here?
going?
So what's interesting about some of this regulatory talk that's coming out of South Korea is that there's a couple different agencies out there. I wouldn't be surprised if they go kind of the Japan route, where they have really good regulation, similar to what we have here in the U.S. But let's take a look at one coin that was interesting to me that I bought today off of that Ripple news. So I think that Ripple news was very big. Ripple had the use case for it is to send stuff around the world. Now you're going to be able to actually use the currency, or MoneyGram's going to start doing that. So why don't we look at another one? Stellar. Stellar is one that is very similar to Ripple. It's created by one of the creators of Ripple. Effectively, the company split and went out and created Stellar. They're already working with IBM. They inked a deal with them to do cross-border payments. So IBM has a payment system similar to what MoneyGram wants to do. It's faster and cheaper than Bitcoin. And what I mean by that is you can move stuff around faster, and it'll cost you less than Bitcoin at this point in time. So those are the things that I like about Stellar. So let's go to the next slide. All right, MoneyGram deal with Ripple. I actually think it's a watershed event for the industry. The biggest problem that people have had is, okay, why do I use these coins? Well, you use it if you're MoneyGram, so you don't have to hold a lot of foreign currency. Other people are going to start looking to say, okay, how do I compete against MoneyGram? Right? They're going to get their margins lower. I got to go out there and look. So now, who do I look for? Somebody that's very similar to Ripple, that has a deal with IBM, and I can get bigger margins, or at least I can make more money like MoneyGram wants to do. And the partnership with IBM, again, I think that's very important here. We talked about how IBM doesn't get enough credit for what they're doing. Now, let's look at the chart. Let's look at what's going on here. Okay, so Stellar, here you go. Had this big run. That's all on the IBM news. Boom, we're down here. It's trading at about 55 to 60 cents or so. I think you get another jump up there as more news starts to come out and more people start to look to use this technology.
Hi, BK.
Hi.
Hi, good question for you.
Yes.
How big is the market cap of Stellar right now relative, and where do you think those would potentially converge, or what do you think the future upside could be?
Yeah, well, so the market cap on all of these things are somewhat outrageous, and by that I mean outrageous when it comes to stock parameters. We're talking about currencies here, so they can grow to the size that they need to grow. Ripple, in a sense, or where do I think you can go on the upside here, trading 55 to 60 cents, would not surprise me to see this thing over $1, so a double, especially if they announce some kind of news, or if anybody comes out and says, hey, we're going to start using this like MoneyGram is.
BK, play sales trader for me on a day like today and a week we've had where things have been pulling back. What are you seeing in terms of the momentum, and are there scared sellers out there? Think about the hands that are holding this. There are not a lot of strong hands out there, so to speak. What are you seeing?
Yeah, what you're seeing is U.S. investors buying, Asian investors selling, and that's created this dynamic where Bitcoin's been just trading in this very large range.
What exchange can you buy Stellar on in the U.S.?
You can buy Stellar on the Bittrex exchange and on the Poloniex exchange, are the two that I have used.
All right. Thanks, BK, for that
My
crypto class. Still ahead, two major sporting events of Super Bowl and Olympics. They're both just around the corner, and they're giving a major boost to one.
All right, so yeah, that's that. I will also say that Kraken, Kraken, is another exchange where you can get hands on stellar lumens. So anyway, do your own research, do your due diligence, figure out if it's something that you're interested in. More importantly, you can always find out more information about a cryptocurrency by going to coinmarketcap.com. So scroll yourself down here, click on Stellar, right? You could come here and you could see the markets. This will basically tells you where you can buy it. So you can go down the line and you can see all the different places where you can actually buy it. Now just keep in mind that it's important to try and find one that has more volume so that the liquidity is not going to be so bad. And then if you're really wanting to learn about Stellar itself, just click on this website thing right here. It'll take you right to here, and it'll, about. You can go through and you can learn all about it. So again, it's not going to be easy. You can't just do things blindly. You're going to have to put some time and effort into it, but it's worth it. So certainly, take some time and learn what it's about before you just blindly invest in it. But like I said, you heard CNBC saying that, and then I came across some other content on the internet showing the technical analysis and showing that it can very easily go to $2. So, I think the guy on TV really didn't do any technical analysis to say $1. But even $1, like he said, it's double. And the other guy that was showing the technical analysis was actually showing that it could still be in some weakness. So it could still be going down a little further. So like I said, buy a position, get some money into it, but look for more weakness and buy some more. Look for more weakness, buy some more. It's always smart to average into a position. If you saw my other screen, you probably saw a lot of dotted green lines going across. That's me building a position for this trade. So, so just be smart about it. All right, so that's really it for tonight. Like I said, I will put this video link in the video description so that you can get to it. And as you can see here, real time, Stellar is still staying within the range. Bitcoin. This is really cool though. I'm glad, again, there's a purpose of me doing these videos, because sometimes I think of something or do something with you guys on this video that kind of is cool for me too. So yeah, so far it's bouncing and staying. Maybe tomorrow we can take a look at this and see if it's stuck within this, or if it's bouncing back down. So again, if you think it's going to be an upward trend, always play the bottom side. For Bitcoin, it would mean that you would have patience. Well, this is a high time scale. You don't really have to do that in a high time scale. What you have to do is you have to be patient, right? Be patient for it to breach these Bollinger Bands. Right? Breaching it, lower than 30, boom, it came back. It hit the median, the middle. This is the median. So every time it breaches, for the most part, almost, again, nothing's ever 100%, but there's a high probability that if you want to, maximize your target for a sale, maybe you get in, okay, for example, maybe you buy 1 Bitcoin at whatever down here, right? Maybe you decide to sell 50% of your position here and then hold the rest. There's different strategies. I showed you that other tool that I have that I kind of used it. I use this and that in conjunction with each other. So when it's telling me to buy something, and on top of it, it's breached these 3, 4, these Bollinger Bands, and then on top of it, there's an oversold condition. I have 3 strong signals telling me, all right, this is a high probability trade where I can make some money, and the key is not to get greedy, right? I heard someone say look for 5% a day. 5% a day is 25% a week. It's 100% a month. And with cryptos, it's even more than that because you could trade cryptos every single day. So think about, you know, maybe even more than 100% if you actually trade on the weekends as well. So just don't get greedy. Be smart about it. You know, if you're in a trade here, you get in. You know, if it's about to hit these numbers up here, these Bollinger Bands, you might want to consider getting out and then just kind of sitting tight. So, like, for example, if you would have gotten in here and you would have gotten out somewhere here, maybe you didn't wait all the way, then you wait for this to happen, right? And then you just kind of sit tight. And really, like, this is about 5 hours of time. So, and then if you're using like trading view right here, you can set it up to alert you when it reaches this band, right? Add alert. And I can add an alert. Apply indicators on BBB. So there's various ways for you to be efficient with your time. There's various ways to set the trap. Instead of chasing a trade, wait for the trade to come to you. Be smart about it, like I said. So look, so you got out here, you waited for it to get here, boom, you're in, right? Now, high probability it's going to come to here. So the minute you're in, you could set a sell signal or sell limit right here, or you could set, like, you know, if you have trading view, you can set another trend line here, right? You know, if you're thinking something like this, or maybe you just go sideways with it, put it there, boom, and then now you just go right click, add an alert, crossing up, create, boom. So now I'm going to get a message. These are all my alerts. So anytime any of these are touched or crossed, I'm going to get an email. So you won't see it now with me here, but it will happen. All right. So actually, I'm going to get rid of this because I don't want to get an alert in the middle of the night for no reason. All right. So yeah, so I learned something new, and I'm hopefully providing you guys some value. This is really cool that I can actually add an alert onto the Bollinger Bands, because originally I kind of just targeted the 30% or the 70% if I'm playing high and low, or if I'm buying or selling. But now I can actually put alerts on both sides of the bands as well as the RSI. So now I have two signals that are gonna alert me, and then in the other platform, there's an alert to alert me that if I'm looking at BTC USD, when there's a buy alert or a sell alert, I'll get alerted with that too. So how great is that? Is maybe I'll get all three alerts at one time. I'm like, I better run to that computer and enter a trade. So, all right. Well, anyway, even though I didn't talk about an opportunity, we're still at an hour, but hopefully I gave you some tools to consider to use. TradingView, it is a paid service for the alerts. You can use TradingView for free to graph and stuff like that, but you won't be able to save multiple. Like, for example, I can save all these charts that I've lined up with lines and different things, and bring them back. Right. So right here, which one is it? You know, if I do Forex, I could bring back my plots from there, and on some of these, yeah, can't see it here. Oh, this is 15 minutes. And here you could see, look, I had some previous analysis that I was doing that it's still saved on here. I think a good one is Euro USD. Yeah, so you can see over here, you know, I had some analysis going on, and these are called channels. Well, this specifically is a, let me go down to a lower chart. Let me zoom out a little bit. Just want to show you one other thing. You can get this from, let me clean some of this up real quick and get rid of some of these indicators so I can show you something. So anyway, you could put all these on here. Like if you decide you want to take a profit at a certain number, there's a software platform within the IML tools that will give you different types of signals, like a bat signal, butterfly signal, and you can go into that service, get it, and then you can actually come here and you can place it on yours. You know, these are a whole bunch of different signals you can use, and you can transpose it onto here so that it, like in the system itself, when the signal is over, they eliminate it. So it's not an active, it's called a pattern, but it's not active as far as they concern in their system. But this is very useful for other trades. So basically, this is a fork. It's called forex, pitchfork. There's other trades that can happen later in time after this trade has happened. And what you would do is you create these pitchforks, and then you zoom out a little bit, and you pretty much try and get try to find where the price and the graph touch some limits. All right, so for example, that would be a limit because the upper one was touched there, and then there's a bunch of things touched here. And then by doing this, and you can apply this to cryptocurrency as well. So with a pitchfork, you go from a high to a low, and then typically you go to the last low. But here you got to kind of best fit it into a situation where it's, you know, the peaks and valleys of the stock is representing and holding to the. Let me see if that's a little better. It actually got worse. Where the heck am I now? Here we are. So when you zoom in here and you start looking, the pitchfork is a good tool to use, but what has to happen is this: you have to create this, and then it has to actually touch this and stick with it. And once it sticks with it, then your bet would be there's a high probability that it won't go any lower and it'll stay in this channel like it did, right? So right here is when I could have drew this, and then as time goes on, I would be moving this around, you know, trying to find the lows, and then once I find one that sticks, and then you wait to see that it came off of it, and then it hit it again, but it's staying there and it's not breaching it. Then you know it's a valid pitchfork. And then from there, you could actually do trades where you get in here and you get out here, you get in here. And what they basically say, there's an 80% chance that if a pitchfork is hit and an outer bound is represented and it bounces back and forth a couple times, there's an 80% chance at some point the price is going to hit this median price. So you see it actually does that down here. So, you know, you could be in and out on these in this channel. And this is Fibonacci levels. This is just Fibonacci levels represented in different ways, resistance levels. It's just called the pitchfork. And so basically what happens is you get a trade from the company that basically says, when it hits point, well, actually there's another pitchfork here that I got to draw. Let me draw the other pitchfork. C to D, C to D, and then you bring this point back to X typically. So here, what ended up happening is it gave you a signal, D to C. Yeah, it actually was giving you a triggered signal to sell. So once it hit D, it basically says, all right, when it goes a certain amount away from it, it's an active sell signal. And typically there's a high probability that it would hit here. But as you can see, it came down, it touched here, and then the minute it breached, so it never really hit off of here and came back down, that was your signal to get out. And here's your stop loss, right? So basically, you would have got out of the trade at a 3% loss, and boom, you would have saved yourself. And then my point was that not only was there a trade there, if this channel wasn't valid, you delete it, boom. This one's still here, and if you, as you see, these have been respected. So now there's still a trade going. After this trade from the system is failed and you lost your 3%, you still have a buy that you can get in for this one, and I'm almost sure you made more than your 3% loss on this one, right? I mean, it moved. There's a little measuring tape here, but if you would have got in, you know, you would have got in somewhere down here, right, when it starts reaching these things. So let's just assume this was the spot where you got in, and then you got out when it got up to here. That's what is it, 154 pips, right? Is that right? 154 pips. So that is, you know, depending on how much money you have, that equates to a dollar number. I guess you could also do this. Yeah, so, you know, depending on get in here, you can use this tool to kind of help you figure out where you want to get in, where you want to get out, and your risk to reward. So right here, you know, there's a very low risk because it's represented, and basically you have a high confidence that it won't come out of this channel. So, you know, you can make, I'm not sure where this amount comes from. I think you have to, yeah, you got to set up your account size. So if you had $1,000, you would have made, you know, you would have made $398, and you would have just risked it about risk to reward 7.96. So whatever money you're risking, you have almost 8 times the probability of making money as opposed to losing money. And I'm not sure how much you would have lost. It looks like you would have lost $50. So if it would have breached it and you would have set it up, you basically set your stop loss like 10 pips below the channel that you have here. So you would have lost $50, and then on the upside you're risking $50, and on the upside you've made $400 on a $1,000 account. So it's like a 40% profit. So even if you would have lost the other trade, it was probably would have been around $50 as well. You would have been risking, like, you lost 50, but you made almost 400, so you're still up $350. Anyway, I'm over an hour now. I just wanted to show you this. This is just another tool that you can research. Just do a Google on pitchfork analysis and Fibonacci, Bollinger bands. Those are the top ones. RSI and divergence. Those are the top things. You know, just take one at a time, focus on it, learn it. You know, Fibonacci is very strong as well. It keeps repeating itself. So I want to just show you something. Let me just clean some of this up. One last thing, and then we're done. All right. So let me just kind of show you a Fibonacci. All right. Let's take from here to here, and then see how much it retraced down. So Fibonacci is a form of a fork. So basically, you would take from the low to the high. Right. That's the high. And then there's key points, there's key levels. Key levels to consider. So if you miss this run, you sit back and you wait. You wait for it to retrace. And depending on if it's a continuation move and it's going to continue going up, you know, somewhere around 38.2 is a number that you should be getting in at. So you wait for it to come back to 38.2. Let's see what happened in the future. So, I mean, you would have been in the game for a little bit, and it would have retraced a lot more, right? Yeah, it actually got down to 61. So I sometimes get into a partial position on 38, and then when it hits 61, and more importantly, when these things, again, see how it applies to this as well? As it breaches the Bollinger Bands, you know, this got close to 30. These were in deep, you know, those, and you take a look at the Fibonacci level. You know, those are three things: Fibonacci of 61.8, breaching of the Bollinger Bands, the RSI. You know, those are all signals to enter. So maybe you would have been down a little bit on your first buy-in here, and that's why I keep telling you, don't buy a full position at one time. You buy, and I mean, if you were if you were doing it the right way, you wouldn't have bought at 38. But you could see like how you, like when you put the Fibonacci on here, you got the Bollinger Bands, you got the RSI. You could look at it very quickly and say, all right, well, it's breaching the Bollinger Bands. It's hitting the Fibonacci of 61.8. And the RSI, if not, I mean, it looks like it breached it. I just got to zoom in. Let's zoom in and see. Yeah, very close. Very, very close. I mean, it did breach it. But I mean, you know, that would be hard to say. But you know, when you have this happening and it's very close, it's, you know, it's pretty safe to get involved. I mean, of course, you want something like this because that'll be a telltale. I guarantee you, it changed direction, right? At some point over here. Yeah, it took a while, but it changed and it came back down. So, again, all right, I'm done. I'm not going to keep talking here. I keep talking all night. But I hope you guys have a good weekend. I hope I gave you guys some value. Certainly take a look at my portfolio if you have something, you know, something interesting. Let me just close this and let me just show you what I was saying. So on my residual page, right here, if you click on this, I'll just do this real quick for you. A video is going to pop up and start playing. You pause it, and when you come down here, this is one that you don't need to know any training about. This is one you don't need any trading technical analysis about. All three of these, you don't need it. And then here's that signal that I was telling you about, the harmonic scanner. So you can replicate that onto TradingView once you get it from here, and then you have it to do your analysis. Because once, like for example, right here, you trade on the D. So once D is touched and it does its move, then at some point when the trade is over, this disappears from the system. So it's nice to have it on your graph because, like I said, later on, after either you got your trade out of this, there could be another trade that I was showing you that it continued and you could have made $400, right? And then, of course, this is the most important thing. This is where I've learned everything I've talked about tonight. I've learned from this academy. There's a bunch of trainers that come on real time and train you. There's a lot of recordings from those trainers. And there's also a beginning to advanced technical analysis course that will teach you about Fibonacci, will teach you about the Elliott wave, divergence, Bollinger Bands, all that stuff. So, again, it's going to cost you a little bit of money to subscribe to all this, but if you treat it like, you know, if you take it serious, there's a lot of value here. And on top of it, you have control over your money. All you're doing is making the connection to IML, who's sending you your broker the signals to do the trades. So at any given time, you could take your money out. You don't have to submit a request to a system for your money, and that's it. That's where I'm going to leave it off. I just wanted to kind of do a full loop on that because I talked about a lot of technical analysis, and this is a great platform to learn that. In addition to make money. In addition to share with others and build a business if you want to do that. But again, this is something you could do without building a business. Okay? So again, have a great weekend. I'll try to do another video tomorrow on something else. And I look forward to having you subscribe to my YouTube channel and find me on Facebook. All right, guys? Take care.